Welcome to my YouTube channel Fin Easy. Today we are going to discuss about Indian financial system. So mainly Indian financial system means Indian financial system is a important aspects of the economic development of our country. Services are provided to a person by the various financial institutions including banks, insurance companies, pension, etc. constitute the financial system. And Indian financial system consists of uh, categorized into four main components financial system. So we can see here one picture. So it's mainly divided into financial institutions, financial markets, financial assets, and financial services. So let's discuss about the financial institutions. So mainly financial institutions are regulated by the Reserve Bank of India. Reserve Bank of India uh, regulatory body for banks, Reserve Bank of India. So mainly RBI regulate the banks. Mainly they are scheduled banks and unscheduled banks. Under scheduled banks, commercial banks. Commercial banks means it comes under public sector banks, private sector banks, foreign sector banks, foreign rural banks. For unscheduled banks, it's cooperative banks. Means under cooperative banks, urban cooperative banks and rural cooperative banks. So RBI scheduled banks means mainly for scheduled banks. Banks in India refer to those banks which have been included in the second schedule of Reserve Bank of India Act 1934. The banks which are included under second schedule, they are called scheduled banks. And for under scheduled banks, it's a commercial banks. For under commercial banks, it's a public sector banks. Public sector banks means the mainly major type of government owned banks in India where the stake is more than 50% held by the government of India. They are called the private sector banks. Private sector banks, foreign sector banks, and foreign rural banks. Private sector banks like ICICI, HDFC, Axis Bank. For foreign banks, Standard Chartered Bank, Citibank, DBS Bank. Under commercial banks, it is also included regional rural banks and are government owned bank that operate at regional level in different states of India. So owner mainly for RRBs, government of India shares its stake of 50%. Nationalized banks, its stakes consist of 35%. State government 15%. And next cooperative banks, the banks organized based on cooperative basis, mainly urban cooperative and rural cooperative. Next, so banks are regular. RBI is the regulatory body for the banks. So we can see commercial banks, public sector, private foreign banks, and RRBs. For cooperative, urban cooperative, and rural cooperative. SEBI is the regulatory body for the mutual funds and brokerage and stocks. It is regulated by SEBI. SEBI means Security and Exchange Board of India. For regarding insurance, life insurance and general insurance, so it is regulated by the IRDA, Insurance Regulatory and Development Authority. For pension related, it is regulated by the PFRDA, Pension Fund Regulatory and Development Authority. So next component is the financial market. Financial market. So what is financial market? Financial market, the place where buyer and seller interact with each other, participate in the trading of money, bonds, shares, and other assets. It is called financial market. So the mainly financial market classified into capital market, money market, foreign exchange, and credit market. So under financial market, the money market, mainly the debt instruments are traded. Under capital market, it is further divided into primary market and secondary market. So under primary market, So when the companies comes with the IPO, it is called primary market, means the trading between the company and the investor. Under secondary market, between the between the investor and an investor, when the trade take place, it comes under secondary market. So under foreign exchange market, it is a spot market and forward market. Spot market means if the trade takes place at the same day, and it is called spot market. If the contract takes place today and it deals in future, it is called forward market. So financial market is divided into money market, capital market, and foreign exchange market. Next comes financial assets. So financial assets are instruments. It means the product which are traded in the financial market are called financial assets. Call money. When loan is granted for one day and repaid on second day, it is called call money. Next, treasury bill. Treasury bill means it known as a T bills also. These are government bonds or debt securities with maturity less than a year. If the maturity is less than 1 year, it is called treasury bill. Next, commercial paper. It is unsecured short-term debt instrument issued by corporations. So it is called commercial paper. So next, certificate of deposit. It is dematerialized form electronically generated for funds deposited in the bank for a specific period of time. It is called certificate of deposit. And another one is the notice money granted for the day and for less than 14 days. It is called notice money. So we have to note down all this. Next, financial services. Services provided by asset management and liability management companies like banking service, insurance service, investment service, foreign exchange service. It's all comes under financial service. So it is the overview of the financial Indian system of our India. So thank you so much. Please do subscribe to FinEasy YouTube channel.